Good morning, CPA Agnes. Can you hear us? Hello?
Hello, CPA Agnes. Kindly unmute. Can you hear me?
Yes, I can hear you.
That's good. Good morning, CPA Agnes. We shall start in 4 minutes. We are giving the participants some time to log on, and then we shall be able to start.
Okay, thank you. Okay, you look. But still with your phone. Okay.
Morning, ladies and gentlemen. I'm CPA Esther Kaliwach-Sache, a coordinator for this paper. But before I introduce a session chair, in the afternoon, we were supposed to have a webinar for CPA 12 Advanced Financial Reporting, but it was postponed to 3rd April at 2 p.m. So kindly inform your friends about that change. Thank you so much. Our session chair for this session is CPA Wasagali Aida, who is going to moderate this webinar. Aida, you're welcome.
Thank you, Esther. Good morning, ladies and gentlemen. My name is CPA Aida Wasagali. I work with the Institute. I want to take this opportunity to welcome our dear participants to this engagement webinar. At this time, we are going to handle CPA paper 9, that is auditing, ethics, and assurance. And I would request you to call your friends who have not yet logged in to do so, because we've already started. And in case of any questions, we remind you to post them in the Q&A. We shall respond to them at the end of the session or at the end of the presentation. With us in the house, we have CPA Agnes Nantes Abietega, who is going to take us through the presentation. But before she comes, I want to take you through briefly. I want to take you briefly through her profile. CPA Agnes Nantes Abietega is a member of the Institute of Certified Public Accountants. She's a fellow of the Association of Chartered Certified Accountants. She holds an MBA from Heriot-Watt University, Edinburgh Business School. She holds a postgraduate diploma in taxation from the East African School of Taxation. She holds a bachelor's of business administration from Kumba University. And she also has several certificates in leadership, taxation, and computer science. CPA Agnes is currently working with the Ministry of Health as a programs coordinator. She previously worked with Uganda National Roads Authority as a manager account. She also worked with the Health Monitoring Unit as a principal auditor. Agnes started her career at the Uganda Revenue Authority, and by the time she left, she was a supervisor, tax compliance. She has also been a tutor for audit and assurance for a period of over 9 years. She has over 15 years experience in tax administration, audits, and financial reporting. With this vast experience in the subject matter, the Institute felt she's the best person to take us through this presentation. Ladies and gentlemen, once again, join me to welcome CPA Agnes Abietega. CPA Agnes, you're welcome. Thank you.
Thank you, Aida. And thank you, colleagues. Good morning, everyone. I hope everyone is well and safe this morning. I am glad to be back with you. And thank you for that humble introduction. So without further ado, we are going to start our session. We shall take some 30 or so minutes to briefly go through the syllabus. Yeah, probably I need to project just for confirmation to be sure that everyone is on board. Oh, am I? Okay. We are looking at auditing, ethics, and assurance, CPA paper 9. Very interesting practical in our day-to-day lives. And I think you love the paper because we also use it, and as we continue to work, it's not only for purposes of passing, but also for work purposes. It's very, very practical. And those who are applying for jobs, you find that you can never miss a question on ethics. Every time we are carrying out interviews, we have to pose a question on ethics. So wherever you go, this is a paper that you'll be with. This knowledge you are getting will be very helpful, not only for purposes of acquiring the qualification, but also in your day-to-day lives, especially at work. So CPA paper 9 tests the technical skills, our technical skills, because the overall objective is to ensure that students or learners are equipped with knowledge of auditing, that is planning, execution, and reporting. And also we need knowledge of assurance engagements as well, okay? That's why we find bulk of other activities, which we shall look at. So today's agenda, the program for today, in these few hours we have together, we are going to take a lot of time looking at the syllabus and the learning outcome. Then we shall approach the questions with the examiner's report, okay? So we shall handle both of them at the same time. We have a lot of material. Probably I should have reduced some, but kindly bear with me. We shall go through a little faster. Okay, so let's look at our syllabus. The key areas of our syllabus, one, we need to know about the people who carry out the audit, because we first qualify as accountants, and thereafter, when given the practicing licenses, we can start auditing. Although some accountants are in practice, others are in business. So we shall look at that. So we need to know who these accountants are. We shall look at the auditing itself from initiation to the end, actually from the time you get an assignment. Then we consider professional ethics and values. In this professional ethics, we shall also look at the business ethics, environmental ethics as well. Then we have whistleblowing as a topic of its own, money laundering, corporate governance, public sector audits, then assurance and non-assurance engagements. Now, this paper requires a lot of knowledge from financial reporting. Actually, some students are advised not to do the paper before doing financial reporting. Why? Because you use a lot of knowledge from that side. When you look at the syllabus, Shori, I'm going to share. Can you share the syllabus? When you look at our paper here, it shows that, yes, the knowledge we get here will help us in paper 16. But also it is important for financial reporting. So if you have done financial reporting, then at least you are good to go. If you are doing both, there's no worry. But if you are starting with audit, then you'll have some challenges in doing this paper. Okay. So let's start with these accountants. Those are our learning outcomes. But I said for each syllabus area or area of the syllabus, for each topic, we shall look at the learning outcomes as we go through the topic. So we shall be covering this. What is key is that we need to know what is being assessed. So for each topic, there are areas that the examiner or the institute is examining. Okay, so when you see that K is for knowledge, there are parts of the syllabus where we only need the knowledge, like those basics, what auditing is all about, if you're differentiating audit from internal audit or from value for money for other audits, it's only knowledge based. kind of evidence, knowledge based. If they ask about the characteristics of audit evidence, it is knowledge based, okay? Though when it comes to application, you have some analysis whereby they give you, say, an asset. You are auditing revenue. So some of the past papers there you will need to analyze. So you need both the knowledge to be able to apply and do some analysis. Also, audit tests can also be a knowledge-based, especially say if they are talking about the sampling methods, it's knowledge, but also it applies to, we can use it to apply. Then the role of internal auditing, mainly it's knowledge-based question. So instead of going through this list, yeah, it will make more sense if we go through the topic and then also the knowledge required or what is being examined, whether it's a comprehension, whether they need some analysis, some application of knowledge, as we shall see. Although what I must say is that for case study questions, of course we have a new syllabus where we have 2 questions which are case study. For case study questions, we shall need application of knowledge, irrespective of the area which is being examined, okay? Because we have a case, so we have to apply our knowledge to the case. Okay, so our first area, our learning outcome is the need for a nature of auditing. Probably for some of us who are just starting this paper, we need to know that auditing is an independent examination of financial statements and the underlying books of accounts. And we examine the financial statements to be able to give an opinion on the financials. So the examiner wants us to know the objective. What I must say is that when you look at this paper, remember how it is separated, the way it is structured. We have auditing, and that auditing, the assumption is external audit. We are going to look at the differences, okay, or the different categories. So the objective of an external audit, we shall look at other types of audits so that you can get the difference very well. But for those who have already started the paper, I believe you know this very well. So an audit is an exercise whose objective is to enable the auditor to express an opinion as to whether the financial statements are prepared in all material respects in accordance with the financial reporting framework. So one of the objectives is to establish whether the financial statements are prepared in all material respects in accordance with the financial reporting framework. At a certain stage, we shall look at what is material. Why do they say all material respects? That means that some items might be considered to be trivial, whereas others are significant and fundamental. Therefore, when we are making our opinion, we consider them. Or you could find that items, say if you are vouching, and maybe I shouldn't use that language now, but if you are auditing and you find there's a misstatement, which is of a lesser amount or another lesser amount, finally, you might have to aggregate all of them. We shall talk about that. But what I wanted to bring out now is that auditors, when you are looking at an external audit, they are considering what is material, okay? So is prepared in all material respects in accordance with the financial reporting framework. So that takes me back to the issue of financial reporting. So we cannot audit, we are not able to audit if we don't know how financial statements are prepared, the basis on which they are prepared. If we don't appreciate the IFRSs, the IASs, we might not be able to comprehend an audit and therefore come up with a true and fair view. So why are these audits carried out? Now, I want to basically talk about audits. Now, it is because of what we call the agency or stewardship relationship. Of course, in Uganda, you'll find that a big percentage of businesses are carried out by the owners, but then we have some legal requirements which they are supposed to follow. So in most cases, these businesses that undertake those mandatory statutory audits, okay, they are not managed by the owners. the owners are separate from the people who run the business. So at the end of the year, at the end of the period, they want to know whether the information, the reports that the people who run the business, the reports they are prepared are actually factual. They say what they mean. So that's why they bring on a third party. So why the need for audit? Because it gives more assurance that financial statements are prepared, okay, in accordance with the reporting framework. It could be for tax purposes. It could be for when you are getting a loan, personal issues, you are getting a loan. It could be for purposes of partnerships. You're partnering with a client, you want to bring in an investor, and they want to be sure that your business is healthy, is doing well. So because of that stewardship, the owners of the business might want to know whether things are moving the way they are being told they are moving. Or it could be for other reasons, like for loan, for tax purposes, okay? But also it could be a regulatory requirement where audits are mandatory for some companies, especially listed companies. So does it help to carry out an audit? It is, because it increases the level of assurance. We shall talk about assurance services, but it increases the level of assurance we are carrying out this audit. So the assurance is for the people who have engaged, the owners, say the shareholders who have engaged the auditor to tell them whether the financial statements are prepared in all material respects in accordance with the financial reporting framework, and whether they give a true and fair view. And it is fair enough. There's what we call audit postulates, that when we are carrying out an audit, at least the documents are provided, on the assumption that documents provided are factual, okay? And then those are assumptions that when we are carrying out an audit, that we are able to extract evidence from such documents, okay? Another assumption is that we are independent of the audit, because there's a third party telling us, tell me what is happening here. So those are audit postulates. I'm just giving highlights on this. However, the challenge is that the expectation gap, that most cases when auditors are engaged to carry out an audit, it is believed that they have come to straighten out the business, to ensure controls are working well, to ensure there is no fraud. Now, what the public thinks about what auditors are doing and what actually the auditors do. You see so many conversations on social media whenever Auditor General presents their report to Parliament, okay? And in that case, when there are millions of things, they start saying, but we have auditors in place. What are they doing? Okay, so we need to know the objective of a statutory audit. It is important that even the public knows, or we educate. So how do we manage the expectation gap? By probably discussing, especially before we take up an engagement, agreeing that, okay, this is what we do, here we don't do, these are our responsibilities, fraud or anything else is the responsibility of management, and all that. That is just an introduction, especially for our colleagues who are just beginning or starting on this paper. Now, for these kind of assurance engagements, we have those that when you carry out, remember we said the objective is whether they give a true and fair view. Now, for you to come to that conclusion that the audits give a true and fair view, you must have obtained reasonable assurance. But before we go to that, I just wanted to bring that out, that some engagements are assurance engagements, others are non-assurance engagements. But let's look at the differences, because in our introduction, we said these are external audits. We looked at the objective of an audit as to enable an auditor express an opinion. The first one is statutory. We are looking at statutory and non-statutory audits. Now, statutory audits are those that are mandated by law. Say for listed companies, they must carry out external audits. However, even other businesses which are not listed, they may be required by other laws, say like medium taxpayers, large taxpayers, they are required also to carry out this external audit. So an audit, an external audit could be a statutory audit, which is required by law, or non-statutory. Someone in Chukubo wants to get a loan, someone wants to do business or import things from China on debt, and then the Chinese say, okay, or the investors say, okay, let me look at your financials, okay? And those financials must be reviewed or must be audited by a practitioner. We have another category. We have external audits. That's the core of this paper. But then we also have internal audits. Internal audit is a subject of its own. As we're going through its knowledge base, we shall go through that as internal audit, only internal audit. But and look at the differences, the commonalities between internal and external audits. But an external audit is someone who is not part of the business, a third party who has been brought about to give an opinion on financial statements. However, internal auditors are employees of the organization. Okay, we shall look at the main differences, but for now, we want to look at the categories. We have public sector audits. Now, see the audits carried out by Office of the Auditor General, where they do compliance audits, they do performance audits, value for money audits to ascertain the economy, efficiency, and effectiveness of the services or activities carried out. We have these days ecological systems, the ecosystems, the social and environmental audits are key. I think yesterday on social media, they were looking at that. The heat. These days, we have a lot of heat, global warming, others are calling it now global boiling. So there are social and environmental audits. Why are we going into this? Is that the businesses we are auditing, what is their impact on the environment? What is their impact on social aspects? Okay, so that is why it comes in. We have forensic investigations, okay? Those are, most of them are non-assurance engagements. This one is quite different from an audit because you go in with, say, suspicion. It's not to give an opinion, okay? You go to get out facts. Then we have IT audits, information systems audit. We've seen payroll audits or HR audits a lot in government and so many other classifications. All these are knowledge-based questions. We need to look at the legal and regulatory framework. We have the Companies Act. We have the Accountants Act 2013. We have the Code of Ethics. It also guides us, the Professional Code of Ethics. There are many other, we have Financial Institutions Act. We have others that we base on, but these two are key for us. Why? Because the Companies Act brings about issues to do with the auditor. It has a section that talks about accounts of a business or books of accounts. Which type of books of accounts a business is supposed to hold? Of course, this is an old. You'll find those other names like balance sheet, the profit and loss, which is now statement of comprehensive income. It stipulates the books of accounts that a business is supposed to maintain, okay? And the contents and the forms of those books. It is law. Remember, I talked about statutory audits. Then also the Companies Act brings out issues to do with the qualities of an auditor. Must have integrity. They should do their work objectively, okay? They must be, say, independent, must be honest, and all others. We look at the qualities of an auditor. It stipulates how auditors are appointed. Businesses, most external auditors appointed by the shareholders, but for some reason, maybe if the auditor has just left, resigned, then the directors are also mandated. But in principle, the auditors are appointed during annual general meeting. We have issues of remuneration of an auditor. So we have corporate governance as one of the topics that to cover. And that topic talks about the board. There's a board, especially the audit board, that does or determines the remuneration of auditors. We have removal, how are auditors removed, all are spelled out in the Companies Act. We need to know, is it because of fraud? Is it because of the period they have served? Okay. Then it also spells up, talks about the rights and duties of an auditor. Okay, he has a right to be heard, has a right to present, he has a right to know about the annual general meetings, has a right to access to records, because then how will they get evidence? Okay, then the duties, they have a duty to get evidence and then be able to express that opinion in writing. Now, the Accountants Act guides us on who an accountant is. Okay, someone is only considered an accountant if they are eligible for membership, if they have completed eligibility. An accountant is a person who is registered with the Institute of Certified Public Accountants and is in good standing. In most cases, when we qualify, we sit back. We qualify, we know I have my papers, become a member, but you don't go for continuous professional development. Probably you don't pay the membership fee, and then you are not a member in good standing. So in interviews, usually, I'm usually part of that team. If you are not a member in good standing, you might not be actually shortlisted. So it's not good enough for us to complete. We must continue updating our knowledge. We must continue getting new skills. We must continue to get information that enable us give value services to our clients, okay? Whether we are in employment or in practice, that is important. So an accountant is a person who is a member, who has been taken on as a member of the Institute of Certified Public Accountants. I know in Uganda, so many people call themselves accountants, but by law, they are actually not accountants. And even if you qualify and you're not registered as a member, then you are not considered by law as an accountant. The Accountants Act guides us on who is eligible for membership. Okay, you must have completed and passed the exam. But 2, you must have the relevant professional experience. There are other colleagues that the institute determines if someone qualified with a program or an institution which is equivalent to ISPAO, they can also be considered for eligibility. Okay, the law gives the institute those powers. We need to know the functions of ISPAO, especially in regard to the professions, the examinations, monitoring audit firms, giving practicing licenses, their disciplinary issues, and so many others. It is also important for us to know accountants in public practice and vis-a-vis accountants in business. Right now, they told you I'm a programs coordinator at the Ministry of Health, and I'm an accountant in business. Although so many people who are employed also have practicing licenses, they have audit firms. So when you are practicing, in other words, you are doing external audit work, you are an accountant in public practice. So I thought that is important for us. Now, all these things, we don't take them for granted because they are there in our past papers. The examiner actually looks at the entire syllabus when they are setting. But these ones are knowledge-based. It's very unlikely to find that you are going to apply, but they are knowledge-based. So you might find a question, a case study, but it has some knowledge-based questions. Okay, we are still on the legal and regulatory framework. I think we shall take not more than 30 minutes. I need to be fast a bit. Then we go to the papers, to the past papers. We need to know how professionals get work. You know, according to the code of ethics, we are not supposed to advertise our service. Okay? So how else do we obtain professional assignments? Now I'm looking at accountants in practice, because accountants in business, they apply for jobs, go for interviews, and if they are successful, they are appointed. So we also need to know about that process. Those accountants in practice, there's a guideline on how they set audit fees. If you've gone through past papers, or if you have to go through past papers, you'll find questions on audit fees. How do you determine the fees? Depends on the complexity of the assignment, the caliber of staff you are going to deploy, the period it might take. You know, the fees, something that you'll need to know the basis of setting the fees. Okay. Professional appointments. What do you consider before acceptance? We have some ethical requirements. First of all, you must have the knowledge. You must know what to do. You must have the staff. You must have knowledge about that business, the laws and regulations governing that business, so that you are able to give an opinion. Okay. You must have the time. So competence is very key. You must have agreed with the client. The client must know what your responsibilities and what their responsibilities are. And after acceptance, if there are any ethical issues that might come up, then you need to bring them to the attention of your client. If you can't put mechanism, like you can't reduce the threats to acceptable levels, probably you might consider leaving the assignment. So matters before, matters during the assignment are to be considered. Then you must agree on the terms of engagement. We have an engagement letter. There are some principal contents of an engagement letter and other contents of an engagement letter. I think I didn't put them here. Okay, but that is something we need to know. Okay, the responsibilities, the role they are going to perform, the people they are going to report to, okay, the kind of reports they will provide, and many others. Of course, there is, okay, I think I'll leave it to that. I see that time is not on our side. So we go in detail to look at this audit. We have already looked at the overall objective is to enable an auditor to express an opinion as to whether the financial statements are prepared in all material respects in accordance with the financial reporting framework, and whether they give a true and fair view. So in so doing, we must obtain reasonable assurance. Reasonable assurance is a high-level assurance. We must perform thorough audit procedures for us to come up with a reasonable assurance. And it is considered a positive assurance that, okay, you are affirming that, okay, the financials actually are giving a true and fair view. We said they are prepared in all material respects. So we have a materiality. In other words, what do we consider as a misstatement? When do we consider it material or immaterial? Maybe I'll talk a little in a second about misstatements. We are looking at errors and fraud. Misstatements are composed of errors. It could be fraud. The main difference is that errors are unintentional, whereas fraud is intentional. We shall look at a standard on responsibilities of the auditors in regards to fraud. But we have materiality is also a topic on its own that you will look at. We have ethical requirements, the issues of integrity, honesty, independence, and we shall look at that as a topic. Then we must obtain evidence. We are going to evidence in detail. Evidence must be sufficient and appropriate. We must get evidence on which to base our opinion. When we get evidence, sufficient evidence and appropriate evidence, it reduces on the risk of giving an inappropriate opinion. That is audit risk. There's a risk in everything we do. There's a risk in life, but there's a risk. Audit risk is the risk that the auditor will give an inappropriate opinion when financial statements are materially misstated. So we must conduct our audit in accordance with the standards. We have the issue of professional skepticism, okay, being critical, having that other mind, that financial statements could be materially misstated. For an audit, we don't go in with suspicion. However, we conduct our audit with professional skepticism. We have professional judgment. We must have that judgment. We've already talked about the postulates and qualities of an auditor. So for ethical requirements, these are the main issues required for us, the key areas of that topic. We must know the fundamental principles, okay, which are 5. We must know the importance of the fundamental principles, okay, the threats. Now, the examiner has said students like this topic, that everything they look at in a paper, they want to use this. We are going to go through this in detail, actually, when we are applying. We need to know conditions or circumstances that might cause this threat to independence. Is it a threat to a self-interest threat? Is it a self-review threat? Okay. Is it an advocacy threat? What could have brought it? Is it because I have my brother is interviewing me? Okay. Okay. Do you have shares in a business that you would have wanted to audit? There are conditions, there are events, there are many, but the examiner brings out those issues in the case. Then we must put safeguards, because we can't avoid those threats. They are always there. But can we reduce the threats to acceptable levels? Is it that you have done reviews? What safeguards are you putting in place? If the threats cannot be reduced to acceptable levels, then you decline the assignment or you withdraw from that assignment. Okay? And where staff, where accountants, where auditors are implicated in these unethical practices, then ISPA comes in. Okay? We need to look at what is their role then. Disciplinary measures, other enforcement mechanisms. Once you are found guilty, you might actually be struck off from the register. We've seen some of our colleagues that have concluded to have been implicated in courts of law, and it has implications to your practicing license. Okay. The standards, the ISAs, we are going to look at them as we apply knowledge. Okay, so for that slide, I will not go into detail. Now, we talked about audit risk somewhere, because our objective is to give an opinion. What if we get it wrong? We might be held liable in courts of law. So there could be criminal liability. This comes about if you are engaged in fraud or helping the client forge, okay? Or it could be civil liability because of negligence. We see companies closed down after getting a good audit report. Those are things we have looked at. I've not addressed myself to the cases, but that is something you need to look at, because we don't have time. I just want to give an overview of the syllabus. Okay. When would an auditor be held liable? They can only be held liable if it is proved that they were actually negligent and they owed a duty of care to the person who has taken them on court. And because of that negligence, the person, the plaintiff, the person who has sued them, has suffered monetary loss. So you can be held liable by the person who has engaged you, or a third party who has relied on your report, who has relied on your information to make business decisions. Okay. So this negligence is some act or omission which occurs because a person did not exercise the degree of reasonable care and skill which is reasonably expected in the circumstances. So when we are doing our work, we need to be mindful that we can be taken on in courts of law, either by our clients, the shareholders, or any third party who has relied on information. We have various cases on duty of care to third parties, but as I said, I've not addressed myself to that because of the time. So what can we do to avoid, to minimize being taken on in courts of law. One is the clients. We need to accept engagements where we have the competences, the skills, where we have knowledge that we are able to do that work. We have the resources, we have the staff to do that work. If it's a high-risk client, we need to gauge and determine whether actually we are able to reduce the risk to acceptable levels. Sometimes the examiner asks about these high-risk clients. Who are they? Probably the client has been implicated in fraud so many times in papers, okay? Okay, the client is in courts of law because of fraud, okay? Or the directors, those are high-risk clients. They have been involved in money laundering, the tax evasion. So those are high-risk clients. So we need to make sure that we do some good client screening exercises, due diligence, exercise due diligence before accepting. And after accepting, we continue monitoring whether there are unethical issues that might come up, that if we knew at the time of acceptance, we decline this appointment. Have good staff when we are, I shouldn't use good staff, skilled staff, staff with prior knowledge or experience should be deployed, give them sufficient time to their audit. We have what we call limiting liability. We can have those obtaining indemnity, like third-party insurance, to ensure that we are covered. We can agree on liability caps and say, in case of anything, we are only liable up to this extent. We can bring in experts where we need to. So it is important that we do whatever it takes to minimize liability. Okay. The causes, principal causes, I think the examiner has talked about this previously. First of all, it is us. We are practicing as the auditors. The staff we deploy, we need to do due diligence of that client screening. But it could also be it's the company that is involved in fraud. No, detecting fraud is not as easy as it is with error because it is hidden. Someone has an intention of making sure that everything looks well when actually they have been involved in fraud. And there are many effects. It could be, it affects us as professionals. It affects the public trust in the profession. We could be engaged in legal suits, and it involves a lot of funds, money. So you find you have to even sell your personal property for some of those who have been engaged in that. So the companies lose businesses, they lose clients, they lose investors, and the government also loses taxes. Okay, need to keep checking on my phone. So for audit firms, it is important that they also put in place mechanisms, because this, the auditing, we look at us as individuals who are involved in an audit, but also the firm itself. There must be leadership responsibilities. The leaders should communicate the ethical requirements. Sometimes we have to sign, you sign disclosure of conflict of interest, confidentiality. You need to sign that you not share information. So it is important that they the firm puts in place mechanisms of how to accept clients. What do they go through? How do they do the client screening? Acceptance, continuance with the firm, human resources about the staff who are deployed on a case, engagement, management, performance, reviews, how do you review, how do you check on the work that has been done, and then constant monitoring. Look at the red flags, the issues that have been raised in an audit, so that probably you design training, more training for your staff, or see how to change the staff in case of need. Okay, so for a good audit, there are some key elements. That the first step is to look at the inputs. The inputs involve the team, the methodology you are using to audit, okay? The team you are putting in. Then that is with staff. Do they know? Have you done good planning of the audit. Okay, then the processes. If the client is computerized, are you using computerized audit techniques to get evidence? Which kind of reports are you doing? But it is important that you keep the interaction, communication open with management, those charged governance, with their users, and you need to know their requirements. But all those are also affected by the legal requirements, the laws that govern that business, the board, how the business is managed, corporate governance, okay? The attitude, the culture in that business, and so many other things, okay? That could be high level, maybe paper 16, but still we need to know. Fraud, briefly. Our responsibility, auditor's responsibility related to fraud in an audit of financial statements is not our primary role. Remember, I talked about the expectation gap, that in most cases, the owners or shareholders believe that when they employ auditors, we shall therefore tell them there is fraud, there has been fraud, we have mechanism of finding out. So that expectation gap. So it is important that we document. They need to know that our role is to obtain reasonable assurance about whether financial statements are, as a whole, are not materially misstated due to fraud or error. It is the mandate, it is the primary responsibility of management and those charged with governance to ensure that there's no fraud. How do they do that? Depends on the level. They must have policies. Now have anti-money laundering, anti-fraud policies. Those policies that must be in place by those charged with governance, key management or the board, they have to maintain sound internal control systems. Senior staff are supposed to implement those sound systems, controls that will enable to identify fraud, to prevent, first of all, but also if something happens, to identify and then stop at a certain way. So those systems should be there, and the system to report. We have those issues in money laundering, where we have a money laundering reporting officer. Can they report suspected fraud? Are they really protected if they report fraud? Can we take legal means? So all staff, there are different responsibilities. Sometimes the examiner wants to know not only management's role, but they might say the key management or the CEO, what are their roles in regard to prevention or detection of fraud. Okay, we shall leave that there. Maybe something small. Our objectives is to identify and assess the risk of material misstatement, as I said earlier. So we need to get evidence that there is no fraud. But in case of suspected fraud, then we must communicate to those charged with governance. Okay. Documentation, I think the last two papers, either the last paper, there was documentation. We look at, in most cases, we refer to this as audit working papers or the audit program. It is important that we document the nature, we document the work we have done. Our documentation must meet the requirements of the standard. Standard is 230, okay? We need to document timely. That means from the time before actually we take up an engagement, because you could find you have to talk to the previous auditor, you have to document, okay? If you have done any client screening, you document those procedures you've gone through, okay? And then acceptance, we have an engagement letter, we keep documenting. So we document, they have to be timely. You don't have to document after leaving the audit assignment. So the audit procedures are documented, significant matters, okay? Issues of inconsistencies are all documented. And then we have this issue of standardized working papers, tailored working papers. Why are they important? We talked about audit liability. In case the client claims you are negligent and you have your documentation well, then you can easily show that, I went through, this is what the audit precepts say, this is what the audit standards prescribe, and this is what was followed. The work was done, it's documented, we did the reviews, it's documented. There was no way we could have seen this kind of fraud. So all that information is well documented. So they are very important. They're important for us for audit liability, but also documentation is important for us to be able to come up with an opinion as to whether financial statements actually give a true and fair view. Some firms have standardized audit working papers, audit programs, and it is good because it is easy to train staff. It is easy for staff to adopt, to review. It avoids over auditing or under auditing. Okay, that judgment, your personal judgment, probably I will not do this because of ABCD, because I know the client, I've been with this client for long. So if you have a standard template, it helps. It benefits the firm. Okay, although it also has some disadvantages that, people take things for granted. They don't put in that professional skepticism. There's no initiative because it's just ticking boxes or just saying, okay, I've done this without really engaging your professional skepticism. So we have those which are tailored, because if you have maybe your clients are different in different sectors, you have one in health, you have a client that deals in health supplies, you have a client within financial institutions, then you need to tailor those working papers. You need to tailor the audit program to suit the nature of client. Okay, that is also good. Okay. So what have we gone through? We have looked at the accountants, we have looked at the auditors, those in business, in practice, the legal requirements. We have agreed the engagement after those client screening exercises. We know the leadership, there is quality management. We know our expectations in the firm that, leadership is responsible for this. We have communicated the ethical requirements. We are comfortable that we are going to do the work. Okay, we have reduced audit liability or any ethical issues to acceptable levels. Agreed the engagement when we start the work. Planning takes more time to plan an audit. We are just going to go through the highlights of planning. We have those preliminary engagement activities. Now, whatever we've been doing is part of the preliminary engagement activities, and it is also documented. If we have talked to the previous auditor, it is documented. The client screening activities, we have communicated the ethical. Those entry meetings are communicated, are documented. We have those engagement activities. Those are key. And also the examiner might be interested in that. But the main planning activities is the overall audit strategy and the audit plan. Okay? Let's look at, at those two. The overall audit strategy sets the scope, timing, and direction of an audit. So in the scope, you want to know the characteristics of this engagement. What business are they dealing in? Are they computerized or not? What are their controls like? You want to know about the management. You want to know about the kind of documentation they have, the accounting systems they have. You want to, we call it know your business before you start doing the work. There are some significant factors. Whom are you going to communicate with in management? Is there any issues of fraud or error? Reporting objectives, are there other stakeholders that you must report to? What are the timelines? What are the nature of reports in addition to your audit report? Then we need to determine the timing. How are we going to carry out these procedures? There are those that are done at the year end. If the client is a big client with many transactions, you could find they are doing a continuous audit. Probably they go and do stock take, they go and audit this before, okay? Not coming at the year end. Although we have year end procedures, it could be an interim audit, okay? Probably it is an interim, could be done because their shareholders want to share dividends, interim dividends and all that. So timing is important. Then direction, that's when you determine the nature, timing, and extent of audit resources, okay? the overall audit objective, which sets the scope, timing, and direction, helps us to come up with a detailed audit plan. In the plan, we have basically audit procedures. Procedures are to be carried out as risk assessment procedures. We shall not go into details, but key of those is analytical procedures, inquiry with management, doing some inspections, doing a walkthrough. You want to understand the business, you do a walkthrough. Oh, okay, this is how you requisition for funds. Maybe this is how you got revenue. How do you requisition for funds? Who are those approving? So you have a voucher and you're going through that. You do a walkthrough. Okay. Then further audit procedures at assertion level. At assertion level is the, you're looking at specific account balances or class of transactions. And you say, okay, probably during the planning meeting, they discussed this, probably they found there's some inventory missing. So you need to design some procedures specific to that. And other audit procedures that are required by law, like you say, going concern issues, related party transactions, and all that. Okay. I think we spent coming to 1 hour. So the planning process, we've talked about initial engagements, activities, you obtain the knowledge, business, you understand the accounting and internal controls, you try to identify risk. We have business risk, we have risk of material misstatements, you determine audit procedures, come up with an audit program, you continue with your discussions, then constant meetings with the team, and then evidence, you come up with your report. So we won't go into details about this, apart from the understanding of internal controls. Which controls are we looking at? Okay. The control environment is basically about the management part, the policies in place. Then the risk assessment, does management do a risk assessment analysis? In most cases, when external auditors come, they ask for the internal auditor's risk matrix, okay? Then the control activities, okay, which controls are you putting in place? The approvals, is it the preventive controls like approvals? Is it detective controls like you're going to review, okay? What kind of controls? It could be systems-based, information systems control, and then constant monitoring of those controls. We shall see all this when we are applying knowledge, but also there are information systems controls, so we need to know, are they application controls or general IT controls? General IT controls support the application controls, and they are both manual and IT related. I think my network is unstable. Okay. We shall look at those later. Business risk, we need to know the risks. We shall look at application. I won't go through that. Audit risk, we have a question on that, so I won't go through that. But what we need to know, that's a function of inherent risk, a control risk, and detection risk. But for inherent risk and control risk, we look at as the client risks, okay? Because it's about management's integrity. It's about the personalities they have, how they process documents, maybe they have any unusual pressure, the factors in the industry, probably the industry is not doing well, they have just changed laws and regulations, maybe taxation policies. So at a certain level, we look at mainly accounts. Which accounts are susceptible to misstatement, like accounting estimates, those that involve a lot of judgment, those where it is inventory, small items, they are susceptible to theft, things like that, okay? So risk of material misstatement is also a function of control risk and inherent risk, but it is the risk that financial statements could be materially misstated, okay, before audit, definitely, okay. Okay, I will skip that. All these about mainly the planning process. We shall leave that. The institute provide these slides, I believe. After planning, we need to agree on how we are going to respond to assess risk, how many staff we are going to have, which procedures we are going to put in place, when to carry out the procedures, and emphasizing professional skepticism. So that is my first presentation. I wanted now to first go to question, then we shall come back to other presentation. Ida, I hope that is okay with you. So I'm doing a new share, members. We want to look at our paper, the last paper. Hello, members, I'm still with you. I'm just getting a new share. Members, any questions, any clarification? Let me first stop the share. My apologies. I need to pick a file. My sincere apologies. I need to pick a file. I'm picking a file very fast. So we are going to look at the last paper we did, November 2023. And because it was audit mainly, that's why I want to bring it out first before we look at other areas. My sincere apologies for that delay. This is November. We are good to go. Ida, I'm still with you. Members, we are still together. Just 1 minute, please. Okay, I couldn't see. I'll share this. My apologies. Okay, new share. Okay. Hello, Ida.
Yes, Agnes.
Okay, my apologies. I was trying to get the file.
Yeah, I've seen the paper that you've shared.
Okay. Colleagues, my apologies. I want us to look at that paper. I'm supposed to be IT compliant. Okay. When is the structure of the paper? This is the new syllabus. That's the time allowed, 3 hours and 15 minutes. The examiner has emphasized that those 15 minutes, we need to use them to look at the requirement, to understand the case. Because the biggest challenge is that we don't comprehend, we don't understand the requirements of the case. So it is important, one, to understand the requirements and then also the case. So what I normally do is I first understand the case before being biased. You can do it the other way around, so that you look at the requirements and then as you go through the case, you are understanding what is required. But either way, whatever works for you, what is important here, we must understand the case study. So this time round for the new syllabus, we have 2 compulsory case study questions, each carrying 20 marks. So we use our 15 minutes to understand the case. And then for section B, we have 4 questions and only 3 are to be attempted. Yes, the examiner has talked about some students who don't complete the paper. Are we able to complete within the 3 hours? Considering that we have 2 cases, yes, we are, because the cases are not very long. Remember previously we used to have 2 pages per case, 1.5 pages, but these cases are brief. They are short. At least so far, so good for the ones that have been examined. Okay, so we need to make sure that we time ourselves. We take advantage, sorry, I'm also making notes. We take advantage of the 15 minutes to understand those cases and trying to structure within ourselves. We try to structure our question, our answer, okay? And probably the other 3, since they are brief, we cannot rest to them. Case study questions require application, analysis, comprehension of the case. So enough of the theory. I want us to start with this case. I want to go directly to what is required. We are required to write brief notes. It is always important to look at the formats specified by the examiner. The examiner might talk about a report. It could be briefing notes. It could be a memo. So you need to know what is required. They give professional marks for them. For now, for this case, we are looking at the risk of material misstatements at RI and how they can be mitigated. Marks, it means that we have 2 parts to this question. We have the risk of material misstatements and then the mitigation mechanisms, how to mitigate. So when you identify a risk, it is important that you explain that risk, how it is a risk of material misstatement, and how it can be mitigated. So that is how you are able to score. So if I have my 3 risks and I can ably show how to reduce them to acceptable levels, then I am able to get the 6 marks. Okay. Part B talks about discussing the matters to consider in establishing an overall audit strategy and understanding information systems. Now, for this type of question, you must have the knowledge. You must know what is in an audit strategy. You must know how one could understand an information system. Now, without that basis, that knowledge, you can't answer such a question. Now, we need to avoid using general knowledge. The examiner has talked about that. How about part A? Do I need to have the technical knowledge? In part A, you need to know what is risk of material misstatement. That the risk that financial statements are materially misstated. So as we go through the case, do you see any indications that financials could be materially misstated? And based on our knowledge, we've seen that risk of material misstatement is a function of inherent risk and control risk. Okay? That financials could be misstated, not because controls are not working, but because there are unusual pressures, that is inherent risk, because there are changes in laws and regulations. Maybe the system is new. It's because of that. Or it could be because the controls are weak. Can we identify those? And then the last one talks about standardized working papers. Okay, the merits of using standardized working papers as part of the audit documentation. So let's very first look at the case. So you're an auditor at JP, a firm of CPA, and your audit firm is responsible for the final audit. Remember, we talked about types of audits. We have interim. Now this is final. So just know that the examiner can ask about the interim audit. They can examine a final audit. So you are responsible for the final audit for Royal Industries for the year ending 30th June. RIL manufactures and sells mattresses and plastic products. So also the business helps us to understand the nature of business they are actually dealing in. That can help you with some general knowledge. So you are currently planning the final audit, and the following notes have been provided by a supervisor. During stock-taking exercise, it was established that staff have access to the warehouse. All staff have access to the warehouse. On reviewing the system and stock cards, the inventory figures had a variance of 13 million. On further investigation, it was discovered that some stock cards were altered and not countersigned by the supervisor, but the stores assistant had no explanation for this anomaly. So here we are auditing stock. We are auditing inventory, as you commonly call it, okay? One, we've seen that it was established that all staff have access. So there was a weakness on controls, internal controls, okay? All staff have access. Then on reviewing the system and stock cards, there was a variance. They also noticed that they had altered, okay? All those are weaknesses in a control. We are supposed to identify risk of material misstatements, okay? Then there is a variance. There are three issues. Now, the examiner has said that in most times, students actually copy and paste what is in the case. They paste it in the answer. Now, what is required of us is noting that there is stock is likely to be materially misstated. And you know, that's the beauty of these cases, because you get the answers from there. So the issue we are looking at is possible misstatements in stock take. That will be our heading. Do I have to define risk of material misstatement? No, because you saw there are no marks for that. So you'll be consuming time, but you just need to know. So we just need to know that there's a possible misstatement in stock year-end inventory values. Okay? Why? Then we talk about that because stock is likely to be overstated because they have altered. The stock cards, some stock cards have been altered. All staff have access. I am not copying what is in the case, but I'm trying to build the case. I'm trying to justify why I think stock could be overstated, could be materially stated, because all staff have access. When all staff have access, the possible risk is that staff can involved in stealing, theft of stock items. That is one. They could be, and when they steal, they are likely to alter the stock cards as what we have seen. And finally, the evidence of having a variance of 13 million, okay, also brings out more the issue that there's a misstatement in stock cards, in stock, in inventory. That is how I'll earn my mark. My 1 mark, by the way. But you don't just highlight misstatement in stock. You will not get a mark at this level because it's a technical level. That is the level required of us. It's technical. I'm supposed to be able to know that if everyone accesses the stock, the warehouse, there's a high risk of theft. If they have altered the stock cards without the knowledge of the supervisor, there's a risk that someone could have taken something and tried to cover up. So it is likely that stock is highly misstated. Now I'm writing my answer. Stock is misstated or overstated, yeah, because of the frequent or access to all staff could lead to theft. And then altering, the controls are weak. Someone alters without actually being noticed by the supervisor. So now the second part of the answer is, what would I do? We are taking long. Even if we do one question, it is important as long as we understand the concept. Sorry, I need to power my laptop. We understand the concept. So how do I mitigate this? My role, I am not putting in place controls. I want to get evidence, because the objective of an audit is to enable the auditor obtain reasonable assurance. So how do I obtain assurance? That means I have to carry out audit procedures. I've not put up a slide for audit procedures, but you know this could be a test of controls or substantive procedures. Okay? Now the application comes in. If I am applying, I'm not going to say I'm going to test controls. I am going to apply substantive procedures. At our level, that will not give us a mark. What we need to do is that how to mitigate that is I'll use substantive procedures to cross-check, or I'll compare the stock count results, okay, with a physical item, to compare whether all items are there. That you have mitigated. What are you trying to reduce? The risk of giving a wrong opinion, an inappropriate opinion. I'm trying to reduce audit risk. So what I'll do, I'll review the stock cards. I might inquire, you'll inquire from the supervisor what could have happened, and then you can do a check depending on the information provided. I can check the items that are missing. We can recount, because 13 million, the reason why the examiner is giving you 13 million is to tell you that the matter is material, because the amount is big. At our levels in Uganda, 13 million is big, it is material. So I'll carry out more procedures like comparing the stock count checked with the physical items, a few items on a sample basis, okay, by tracking items that have just come in to ensure that they are there, okay. So you carry out those procedures to ensure that stock is not materially stated. On the second part, so where you have questions or clarifications, either can come in there. We shall have questions at the end. On the second part of this question, RII acquired new machinery. So the first one, they are auditing inventory. So if you don't know, if you don't done reporting, then it might be a challenge because you don't know how store inventory is valued. Okay, you don't know maybe those procedures they do at stock count and all that. So part 2 says the company acquired new machinery recorded at 190. Okay, now this one is in dollars. 190,000. We need to know the reporting currency, but I think that might not be significant. It might not be a big issue for now because we need to restrict ourselves to risk of material misstatement. Acquired new machinery recorded at 190,000 US dollars in the asset schedule, but no approvals from the board had been sought to purchase the machinery. So we find there is a control weakness. There's a control gap. Remember those control activities or control procedures, one of them is approval. Authorization, or as you call it, okay? Approval from the board to purchase the machinery. On review of the supplier's commercial invoice and import documents, the machine was quoted at 100,000. Additionally, no factory tests were carried out on the machine. So what is the risk of material misstatement? Usually, the underlying risk with assets is overstatement. And now, this is a thought process. It's not part of your answer. And the underlying risk with liabilities or expenses is understatement. Why? Because the people who prepare, management is the one who prepares the books of accounts. They want always to show that the company is doing well. They cannot do it to their disadvantage. They need to continue in employment. Remember the stewardship issue we talked about, agency and stewardship concept? Yes, they are agents. They are stewards. So they are supposed to work in the best interest of their shareholders, but sometimes that could happen. So new machinery recorded at 190, but the invoices are showing 100 for the import documentation. So one of the things is that you can, the risk of material misstatement is the assets are overstated to show the good. The risk is that the assets are materially misstated because they are overstated. Reduce audit risk. How do we reduce the risk of giving an inappropriate opinion? So how do we audit assets? So your mind goes back, how do I audit assets? It could be checking existence. You can physically inspect that the asset is there. In this case, it must be there, but you need to confirm it is there, okay? You might plan to inquire from management whether there were any circumstances that could have led to them revising the amount, okay, or to uplifting the amount to that. Was it revalued? So how do you do that? You are going to do inquiries with management, okay, as to the justification for quoting it at 190. Then you are going to vouch. You are going to review the import documentation and the commercial invoices to confirm that the amount actually quoted is 100,000, not 190,000. Okay, so that is how you are going to reduce, mitigate the risk of material misstatements. Okay, the examiner noted that students sometimes, when it comes to mitigating, one, because when they hear risk, they think about those fundamental principles. Now, which is wrong? You need to understand the question. Two, the examiner has talked about financial statement assertions, that students like them. The way they talk about substantive test, someone doesn't say which test. So at our level, we must state, are you inspecting? Are you reviewing? Are you inquiring? Are you carrying out analytical reviews? Are you vouching? What exactly are you doing? That is the audit procedure that is required for you to be able to get that 1 mark, okay? So that students use those issues of existence, ascertain existence. You could say I will physically inspect the asset to confirm that it actually exists. Then you review the import documentation, okay, to confirm amount at which the item is bought. Then you are going to inquire from management to ascertain whether or not actually the board, they sought for approval from the board, and what could have led to the waiver in case of any, maybe it was an emergency. That is what you have to document to reduce audit risk. Okay. Number 3, RII owns a fleet of vehicles that distributes products to their intended markets. Okay. The cost of fuel and repair had increased significantly. This was due to lack of mileage cards on the various routes. Okay, so now the other one was a capital item. Now we are looking at expenditure items. This was due to lack of mileage. Okay, secondly, truck drivers were free to repair vehicles from any garage of their choice as long as they had permission from the fleet manager. Okay, so the risk here is that the risk of material misstatement is that expenses are likely to be overstated, and assets there's a risk that they are understated. Why am I saying that? You know, when you are repairing assets, if the repairs increase the lifespan, the economic value of the item, then they are capitalized. So the risk of material misstatement is twofold. There's a risk that the expenditures are overstated. Why? Because a vehicle might not be faulty and it is, you know, is repaired. But also if that expenditure increases the lifespan of the asset, then the asset item is also understated. That's the risk of material misstatements. So how do I mitigate that risk? Okay. On a sample basis, probably during a period of time, you are going to review the fuel receipts, those cards they fill after the repairs, okay, to ascertain, okay, whether actually they were approved or they are from genuine or pre-qualified garages, okay. Where the amount is substantial, I'm putting a plain disclaimer. Where the amount is substantial, I might consider circularizing right to the garage. So you'll obtain a list of pre-qualified garages, because here they are repairing from any garage, to confirm that actually they didn't repair from pre-qualified garages. Companies have their garages, even if they are small companies, they know that, we go to Mulago, we go to this garage, not just anywhere, okay? Now, you might circularize, consider writing to those garages to confirm whether they are in existence, because they might actually not be there. Depending on the substantial amount, if the amount is significant, then you need to consider actually doing that. Then you might request, you might request if they have a mechanic to review, to check. Now here we are looking at an expert, because they are saying they have a fleet of vehicles. So you might use expert knowledge and permission of the client. That is also a possible way to reduce the risk, the audit risk. So here we are looking at, we have already identified where the risk is, that the assets could be understated if the repair could be a capital item, they are due for capitalization, and also the expenditures are overstated. That is the risk of material misstatement. How you are going to mitigate the risk is now you vouch these receipts that the drivers have brought. You can do also analytical reviews to look at the trend, the recent past of those repairs. Okay, maybe servicing. Was it due for serving, or maybe they be due for serving or servicing? That's why they are breaking down. So you might also carry out analytical reviews to look at where there are outliers for those garage expenditures or repairs expenditures. So where they are more in a certain month, then you'll go to that month and do thorough vouching. Okay. A new accounting system was introduced in August 2022 to replace QuickBooks, which RIL has been using since incorporation. Management before its full implementation Management before its full implementation successfully tested the system, which is good. However, only the finance director is familiar with the new system and no plans are in place to train other staff on its use. Okay, so August 2022, they told us the financial year end is June 2023. So it is in this financial year, okay, to replace. Now, whenever you introduce a new system, now we are going to IT, information systems. Okay, what are the risks, the likely risks of misstatements? Now, one, they say it was fully tested. Now, there's a possibility that the risk of material misstatements could be that all information was not rolled on to the new system. Okay, there is that risk. Now, although the system was tested before being implementation, the fact that it's only the finance director, because for IT systems, we usually expect that they're able to initiate, process, and report transactions, okay, with integrity, without errors. Now, the fact that it's only one person, the risk of material misstatement is that information in the system could be garbage. There's a risk that there could be there could be altered, the information could be altered without knowledge of any other person, because this is the finance director. There are no reviews, no further reviews. Okay, so we could be relying on fraudulent information or information with errors. That is a very high risk. We call it unauthorized amendments. So the risk of material misstatement we have recognized is one, the transfer information. Some information might not have been rolled on in the new system. There's a risk. Two, there's another risk that actually there are errors in processing. Then three, unauthorized amendment on the system. Okay, so now what happens? How do we mitigate that risk? So we can do a walkthrough test. First of all, we shall inquire from management as to why it's only the finance director and recommend that other staff are trained and they are given access, due access on the system. Those that are supposed to get access or limited access, that is one of the things. Two, we shall request for a password or rights on the system, and we audit through the system. So there, the use of CATs, computer-assisted audit techniques, will come in that area, okay? So that you are able to reduce the risk to acceptable levels. Now, the last one is 130 million has been discovered stolen at one of the sales outlets in Masaka. Reports reveal that cash and credit sales never authorized those transactions, but the costs had been included within the discounts allowed and wages expenses. So we have our revenue in question. Okay, so the risk of material there's a risk that the expenditures are overstated. Okay, and the sales are understated. The revenues are understated. Why? Because they are being stolen, so they are not reported. Okay. Stolen sales out at 130 million has been discovered stolen, and that is really substantial. So one of the things which is not directly on this part is that also reviewing the going concern of this business. That is 130 million that has been discovered. Probably there are other things that are not being discovered. Okay, that is one of the indicators of going concern, considering the significance of that amount. So the risk of material misstatement is that their sales are actually overstated. They don't exist. Okay, and the expenditures, you've seen the wages are understated. So how are we going to mitigate that risk? Is now by review. We are going to review the wage expenditure. We're going to vouch to ascertain whether they're all supported. Of course, wages, it's easy. These are salaries. So we are going to do a payroll audit, a wages audit, okay, a mini. Yeah. We're going to inquire for evidence of approval, whether actually they were approved. That is how we shall mitigate that risk. Okay. Doesn't that take a lot of time? Of course, here we are discussing. We are discussing. Sorry, can you speak something? That's why it might seem like we are taking a lot of time. But in the paper, since you use those 15 minutes to go through that case, and you see it's just one page, then it is easy to identify a misstatement, a risk of misstatement, and they come up with mitigation. So any cases with risk, sometimes the question is internal control weaknesses and ways of how to mitigate those. When it is internal control, now you put yourself in the shoes of management and see which controls that they can put in place. So now I'm saying that based on the other previous past paper. So we look at matters JP will consider when establishing an overall audit strategy and understanding the information systems. Here we need the knowledge. We need to know. We need to have that background, the knowledge. If I could briefly take you back to the slides. Just for you to appreciate the issue of audit strategy. Okay. So that is the part that is being examined. Characteristics. So in your answer, the examiner expects you to bring out issues to do with the scope, the audit strategy, that you'll consider characteristics of the engagement, the significant factors, the reporting objectives, then you tailor them to the case. Okay. I'll share with you. Okay. So these are 6 marks. When we are looking at our overall audit strategy, how many points there we have? We have the characteristics of the engagement. We have significant factors. Those are 2. We have the reporting objectives. Those are 3. We have those are under scope. Then we have timing. Okay, interim, final. That might not be very relevant. Okay, at this stage, because we are doing a final audit, the examiner has already told us. So if you answer that using that part, you won't get any marks. But we have scope, timing, and direction. We have direction of the audit. Okay, so matters to consider when we are looking at characteristics. Now we go back to the case to pick our issues. Characteristics is that now the controls are weak when we are setting our audit strategy. The question says, discuss the matters you will consider when establishing overall audit strategy. We are trying to come up with an audit plan. So when we are establishing the general plan, the audit strategy, we shall consider the fact that the controls are weak. The authorization controls are weak. Segregation of duties is lacking. We saw where the finance director is the only one who can access the system. The physical controls are also weak. Why? Because we saw somewhere where everyone accesses the warehouse. Okay? So that is something that when we look at that, we shall, when we are determining the resources, we are determining the staffing, it is that you also do it like in a form of a table. You have a character, you have the characteristics of the engagement is that the controls are weak. You justify why you are saying that to the examiner, because the physical controls, then we have talked about authorization controls and all that. Then this side, you will have to say that then, therefore, it is important that I deploy experienced staff. My issue will be that the firm, as JP, we have staff who are experienced in inventory audit, okay, who can audit kind of machinery. We saw the 190 vis-a-vis the 100 to reduce, to be able to, that will be our strategy, to get sufficient and appropriate evidence, okay? Then we talk about reporting objectives. We look at, we consider the management, because we shall have to, there's some kind of fraud that is hidden in a certain standard. We are picking it from 260, the laws and regulations, 250. So we are also, we plan to discuss some of those issues before the audit exit. Not in the exit meeting, but we plan to discuss that. As we come up with our overall audit strategy, we consider the reporting objectives. We consider the significant factors like materiality. We've seen the 130 million. It is fundamental, not only just material. Okay, those are significant factors. Another significant factor is that it's a new system. Shall we be able to get all the information? Then part 2 on understanding the information systems, the matters to consider is that we shall need to get a manual. Do they have a manual? We shall need to review the manual. We shall need to request for the rights to the system. We shall consider using computer-assisted audit techniques. Okay, those are 3. Okay, then we shall maybe look at because they said they did the full test before implementation to inspect those notes, that report that actually management considered. What are we doing? We are applying knowledge. We know basically that in the strategy, you look at the scope, timing, and direction of an audit, characteristics of an engagement. So you go to the case and pick out those characteristics that the examiner has given you, okay? And that will be the basis you're getting the marks. Then lastly, we look at the merits of using standardized working papers. Previously, when we are going through, we said that for working papers, they could be tailored to a client, to a sector, or they could be standardized. And some of the merits is that they enable documentation of all the items that have been viewed or the audit process, because you don't leave out anything. Someone has a checklist and they're supposed to do A, B, C, D. Okay, so you avoid under auditing or over auditing or spending more time on areas that are not high risk. That's an advantage. It helps to document all the key issues, even including the discussions with management. Now, like the discussions we shall have about that 130 inventory, because usually, even for standardized working papers, those high risk items are always included, like the inventory, usually assets, depending on the client. Okay. What else? They enable review. So this is, oh, it has two parts. It has the evidence, the merits of using standardized and working documents. Okay, in documenting audit evidence. So it is important they enable training, world training. You don't over audit. All items will be covered on the audit program because they are standardized, they are there. The checklist, someone has to do ABCD. Okay, they enable review, they help with training. You can easily identify the weak areas for all your staff that probably when it comes to inventory, they are not able to do ABCD. So it will enable well training, further training in other cases. Okay. I know we are not doing well with time. It's 1:45, but let's look at the second case. Just one item. Ida, I'm with you. I just want to pick one document here for use as we continue. Information technology. So members, Ida, are we allowed to pick some questions regarding that part, or you want us to first complete?
Agnes, first complete, we shall handle the questions later to once.
Okay. Okay. Sorry for that commercial break. Members, I'm with you shortly. I'm with you shortly. I'm trying to share. IT issues, my apologies. I'm trying to share. Oh, I'm struggling with my network, but I'll be with you shortly. I'll be with you shortly. My network. My God. I think I opened so many things. Okay, here we go. Aida, am I sharing? Hello,
Yes,
Aida?
Agnes. I can see your screen.
Okay, so let's look at part 2. I was trying to pick the screen for money laundering, and I couldn't. Anyway, for part 2, which is also a case, explain the general powers of the Financial Intelligence Authority in enforcing ethical practices at GHN. Discuss how justice and virtual approaches would have helped the NGO Bureau officials to resolve the standoff, and then highlight the challenges that are likely to be faced when instituting good corporate governance. Oh, sorry, I was not, okay. One, the examiner has talked about the syllabus. We need to fully cover the syllabus. Some of these areas might look like new areas, but we've done a lot of money laundering probably in our previous studies. And for this one, you in Financial Intelligence Act, not so much, but the beauty is that the institute is providing a text with all the information. We shall soon have a text where public audit of public entities will be included, and then such information you can always. Oh, is my screen share post?
Yes, Agnes, go ahead.
Okay. So for these questions, we are looking at the powers of the IFA in enforcing ethical practices. We are discussing how justice and virtue approach. This is now the ethical approaches would have helped the Bureau officials to resolve the standoff, and highlighting the challenges that are likely to be faced. Okay, since it's application, let's look at the case. The Financial Intelligence Authority has frozen the bank accounts of Gunda Humanitarian Network, a local NGO, over allegations of money laundering and funding subversive activities. This was after reports from the NGO Bureau accusing GHN of non-compliance. Okay, so we have non-compliance with the NGO Act. You don't have to know the NGO Act, yeah? As long as you have the Anti-Money Laundering Act. The few issues are in the text that we need to answer the question. GHN has an expired permit. They have an expired permit. They do not disclose the source of funding and has not filed for returns. Not filed annual returns to the Bureau for the last 3 years. Okay, so those are actually glaring. However, civil society organizations have reacted with satisfaction at the government's closure and suspension of GHN, citing political reasons, since the NGO has been working in the areas of transparency, accountability, and governance across the country. The executive director of the NGO Bureau has refuted the baseless allegations. The executive director also says they are not aware of any charges against them, and that the alleged acts of criminality are unfounded. Okay, so you work as an accountant at GHN. So these are accountants in business. The other first part, we're looking at an accountant in practice. They are all professionals, okay? So the executive director has requested you to enlighten him on certain issues as he prepares to contact the lawyers to sue the NGO Bureau and the Financial Intelligence Authority. Okay, There are different powers. Now, those ones, it's not general knowledge. It's the act. And when we look at our text, it gives those in the notes. So as the examiner has highlighted, it is important for us to cover the entire syllabus. Now, my presentation was mainly audit because it covers a bigger part. The slides were in audit because it covers a bigger part. And due to time, I know the Institute to prepare another engagement. We shall cover the rest. I'll request for another engagement to cover the rest, to take you through the syllabus area for the rest of the topics. So in this case, the authority has power to establish its structures. How many points are we looking at? There should be at least 5. Okay. The intelligence authority has the powers to come up with a structure, their own structure, the staffing levels, the terms and conditions of service are also determined by the board. They have those powers, okay? We shall reach on the powers of investigating. They have the powers. They can assign a second staff to any company where there are suspicions, okay? They have those powers as well. They have powers to enter into contracts or acquire assets. They have those powers as well. But mainly the ones that are related to the case above is that they have powers to investigate, to obtain information. So as long as there are any suspicions, they can always come in to do an investigation on any company, as long as they receive any information. So much as the Act gives us many powers, authorities, it is important that we pick out those that are relevant to the case. So what is relevant is they can come and investigate, okay? They can obtain information. They can instruct another accountability institution to come and investigate you, like the IG's office, Inspectorate of Government can come in, okay? They can take your records, they can make copies of your records. Now, that is very applicable. So whenever you are going through a case, you look at points that are applicable to the information so that the executive director gets to know that these people can actually send my report to the funders of this NGO, okay? They can check documents. They have powers to review them. They have powers actually to take you for prosecution, okay? So it is important that you understand those. As an accountant, that's the information you need to give the executive director actually before he goes to his lawyers, that actually the law provides for them. It's an institution that is established by government. It can take you on, it will look at your documents, it will instruct maybe accountant general, auditor general to look at your documents. They can make copies, they can send a report to our funders and all that. But when you exhaust those ones that are related to the case, then you can talk about establishing, they can assign their staff, they can, their board will come up with a structure and all that. Knowledge-based, though some little application. Now discussing how justice and virtue approach. Now here we are looking at, we are basically considering those ethical approaches, which we have not gone through, but we shall have another engagement where we go through the syllabus areas of that. I'll formally request the Institute for that. Justice. The executive director feels that probably they are being witch hunted. So we need to discuss how justice and virtue approaches would have helped the NGO. Okay. Now, this ethical approach is about equality, is about fairness, okay? So how many points do we need? Probably 5. Well explained. We need to have points on the fairness and then the virtue approach as well. So for the justice part of approach, or fairness or justice approach, we need to talk about that this approach looks at fairness. In other words, we are considering whether the FIA is fair to go for this. Any ethical person, any person thinking through, that's the thought process one would have. Are they fair to go for this? Are they being treated fairly? Are all other NGOs going through the same, or because they haven't obtained suspicion? Okay, that is our thought process. Probably you get 1 mark for each of them. Okay, have they heard from the company, GH? Have they given them fair hearing? What are the matters you are going to consider in this? Is that generally the authority should be fair to all. That left alone, then they need to consider whether all other NGOs are treated equally. Not that this one is being witch hunted, okay? Then the procedures, because there's usually a tendency of these institutions to come and confiscate documents and all that. They need to go through procedures in a fair way, in a just way, okay? When they are taking documents, when they are coming up with a case against the company. So that is what fairness is all about, okay? So the company or the executive director would be comfortable knowing that it's not only them that are going through this, but all others, they go through the same procedures, they have the same agreement, okay? That is about that approach of fairness and justice. Then the approach of virtue, the virtue approach, is that it's consistent with the ideal virtues, okay, of humanity. We are looking at, are they being human? In other words, when you are looking at it with those ethical approaches, you'd consider that probably the institution, the authority, should look at the beneficiaries. How many people benefit from this NGO? And if it is closed, how are they going to be affected? How will the country be affected? Usually when you look at managers, the way they handle issues, it depends. Sometimes they look at who are the beneficiaries, how are they going to be affected? Can we only consider the management, the managers of this, so that others, okay? So they need to act with those virtues. They need to have some bit of moral actions, considering them like morality. So these are a bit abstract. I just want to say that. But as long as you appreciate the concept that, okay, if it is the justice approach, we are looking at what is good for me would be good for another person. So whatever decisions that are being made, you need to consider that justice for this NGO and also others, all being treated equally, okay? Yeah, I think I've been advised that there are 2 marks for each well explained, okay? Thanks for that. So it is important that you consider the characters, the individuals that are playing their former history. So instead of just closing off, much as we appreciate, the examiner just wanted to bring that approach, that they appreciate that they have the powers, the authority is there to enforce this. However, the way they are enforcing it should be in a just manner. That is what part B is all about. Then the challenges that are likely to be faced by the company when instituting good governance, good corporate governance principles. That is of course, there might be conflict of interest here and there, challenges. If they are probably the accountant, their staff have worked for them for a long time, and there's that close working relationship, they wouldn't want to because we are looking at ethical approaches, that you want to think about another person and the actions that occur. So there might be conflict of interest. They want to retain their jobs, but they also want to act against those, to work, probably reprimand the staff who are involved in fraud or subversive activities for that matter. So there could be conflict of interest. There are issues of transparency. The challenges that are likely to be faced if they've been getting money and benefiting, it might be a bit hard for them to become now transparent. That is one of the challenges, although they will definitely have to get to be transparent. Okay, accountability issues, because if you tell staff to account, they have taken a lot of money. That is one of the challenges. You could find the NGO to the donors might stop funding until they have accounted for all the money. So that could also be an issue. There's accountability, there's a transparency. How transparent are they going to be? Okay. There might be conflict of interest because they also want to retain their jobs. They want to keep earning money. And then oversight. Who is going to do the oversight? I'm hoping the board is not part of what has happened. So those are some of the challenges that might actually come. Are we trying to apply? There is some knowledge we need, like for part A. Part B, we need to know what the justice and virtue approaches is all about. And then we try to look at the case, the NGO, and the financial intelligence. Is it being fair to all? Is it only this? Are they being witch-hunted? Okay, and all that. And also the NGO, to make right, they have to face challenges. They might have conflict of interest. So you could find there are some like advocacy theory, if some advocacy threat, if they are told to go in courts of law, some might be witnesses that actually this happened. Okay, those are the things that must be considered. So before we continue, is section A about a certain area of the syllabus? No. The examiner can pick from any part of the syllabus. What we know is at least it will always continue to be a case study. What is important is that you should not use general knowledge. Our examiner has talked about using general knowledge. The examiner has talked about staff giving general points, okay, basing on their experience, probably where they work. The examiner has talked about giving less points. So always look at the mark allocation and ensure that at least you have a point which is well explained. Desist from just listing points, even if you're running out of time, but you need to explain so that the examiner ensures that you are actually not just gambling, okay? You have a point which is well explained, you understand the issue that you are bringing on board. In these 30 minutes, I know we shall have done the section B, because they are short questions, and we shall also have time for
CPA Agnes,
yes, please.
I want to interject a bit. Time is not on our side. We are actually in bonus time. I would request that you utilize the remaining minutes. We have only 10 minutes to go to the question, to go and answer the questions that the participants have posted. We don't have time. There's another engagement which is coming on soon.
Okay.
So I would request you go to the questions and answer them.
Okay. So I'll also request if you could give us another engagement to cover, even if it's 2 hours. If you could arrange another engagement since it's online, and then we cover the rest of the part of the syllabus.
It has been noted, Agnes. We shall arrange that.
Okay. So thank you, colleagues. Thank you, members, for your time. Shall we be able to access the recording and the slides? Yes, you will. and the ones you get will be beefed up so that the next time we meet, you have the slides actually even before we started. I'm sorry about the network. So the second one was about, can the whole presentation be shared, please? Yes, it will be shared. What could be the auditor's opinion on the acquisition of the asset, given the fact that its purchase was not authorized? Is the auditor going to register it or not? No, John, this is from John. John is wondering what we shall do about the asset, or whether it should be registered. Remember, the external auditor is not part of the business. The external auditor is only giving an opinion on the financials prepared by management. So we are going to advise. Remember, first of all, we shall get evidence on that asset, whether it exists, whether the value is appropriate, the amount. Remember the 190 and the 100,000 US dollars, we need to know, and also inquiring why it's in US dollars anyway, okay? Because they must have the same reporting currency. We see where Uganda shilling somewhere, we see US dollars, and then if it was converted, then we need to verify the conversion rate, whether it is appropriate or not. So they cannot deregister, but they want to appreciate, to be sure that the amount stated is not way above, and inform management, because if they have overstated the amount, they have included 190 US dollars instead of 100 US dollars, 100,000 US dollars, it means that the assets are overstated, then there are implications for that. So our role is to bring out that and inform management. What are substantive tests? Now, we have two types of tests. We have test of controls. We test the controls of an entity, but substantive tests of substantive procedures are detailed tests that the auditor carries out at the planning stage, during the audit, and at conclusion stage. And that's where we do the recalculations, recomputations, the observations. Those are substantive tests, okay? Analytical reviews, those are detailed tests the auditor carries out to get evidence. So audio is on and off. My apologies for that. I can't see the screen. Kindly clarify analytical procedures, substantive procedures, and substantive analytical procedures. What's the difference amongst the three? The past paper solutions don't show the difference so well. Now, we have two major types of procedures. We have tests of controls and substantive tests. Now, analytical procedures are part of the substantive procedures. So substantive procedures are divided into two. They are divided into in the test of account balances, class of transactions, then we have part of analytical procedures. When they say substantive analytical procedures, is because when we are beginning the audit, we carry out also analytical procedures. They are carried out at three levels. At the planning stage, when you are planning the audit, there we are comparing the previous period, the current period, the previous reported amounts, the current, we are doing a comparison. But when it is during a substantive analytical procedure, then we are doing detailed audit procedures, like ratio analysis. I believe the next time we meet, we shall do that question which has ratio analysis, like carrying out ratio analysis, that comparative analysis. Those are substantive analytical procedures, but they are also carried out at the review stage, okay? That is the difference. What are the steps to be followed when carrying out an internal audit, say in a microfinance institution? How often should it be done? Say evaluation of internal controls. Now, internal audit, it depends on the plan given, because for internal audit, you come up with your plan, you provide it to the audit committee, it is approved. So how often? It depends. It depends on the plan, because the plan is you agree on the plan way beforehand. But next time we sit, we shall look at those standards, because internal audit also have their own standard. How will some of us who join late get slides? You will get slides and we shall have another engagement. Why do we fail to audit? Here you are reading notes. It looks very easy. I didn't understand. Here, audit procedures, same as audit assertions. Not really, because I think here you are meaning assertions. We are looking at financial statement assertions. I want to think that's what you meant. Audit procedures is the work you do. Financial statement assertions is what our objective. My objective is to ascertain whether assets exist. Existence is an assertion. The audit procedure I will carry out is to go and inspect that asset. Okay? So that is it. Okay? Thank you. Kindly download the presentation. The network is on. Shall receive the presentation. Yes. Shall be shared. Yes. We do share the new syllabus. Yes. Okay. New syllabus. Okay. Most of them were about the assertions. We shall have another engagement. This was brief because I just wanted to cover that part of auditing. We shall cover the next part of the syllabus, God willing, if we get time. Madam Sache, over to you. I think those are the few issues. Most of them were about the slides. Yeah, okay. Thank you.
Thank you, CPA Agnes, for that wonderful presentation. It has been really enriching, and I'm very sure that our students or participants have benefited. We are going to organize another engagement so that we complete the remaining part. Soon, we are going to share, most likely on Wednesday, on 3rd of April. So I will discuss with you after this, and we arrange so that you can come back and complete the remaining part. I want to thank you so much for sharing your knowledge with us. Our dear participants, we thank you for participating. You've really been a good audience. And at this point, I would request to end this call. Thank you so much.
Thank you too.